All right, hi guys. So welcome to another weekly crypto update together with BlockchainSpace and Fortifex. We're going to bring in Luke. So give me a second. So Luke, are you there?
Yes, hello.
Yep, awesome. Right, so I'm going to steal a little bit of limelight here. So whilst Luke gets himself ready on his end, I'm going to just share a couple of updates actually from the Philippines. So I understand actually we've got people from both the Philippines and Malaysia tuning in today. So welcome to the Malaysians that are joining in on the stream. Great to have you here. And then mabuhay to the Filipinos out there. And I hope everyone's staying safe, even though the weather outside is kind of gray and cloudy and rainy. So I thought, so I had some requests actually from some locals here just to give like a quick update on what's happening on the ground in the Philippines. And so I thought I'll share you a couple of updates that I've been tracking this week. So give me a second. I'm going to just share my screen. Luke, can you still hear my audio?
Yes, no problem.
Awesome. So as you guys can imagine, so in the lead up to the Bitcoin halving, I actually saw an increase in kind of retail interest into Bitcoin itself, and something that's kind of been prominent here in the Philippines is actually like a prevalence of scams, and it's good and comforting to know that basically our regulators over here in the Philippines have been picking up on a couple of different projects. And this one here that you see on the screen there is the Department of Finance warning about a cryptocurrency scam where they actually used the president's name to endorse their projects. Along with this, so actually in the same week, you have another scam that was actually called the Bitcoin Revolution. And our securities exchange actually picked up on this as well, and has basically been trying to protect investors from kind of any kind of Ponzi and pyramid schemes out there, and that's very, very good to know. Right. So as you guys will remember, yesterday was a big day for us. So actually, we had an impromptu meetup last night with the Filipino community, and we were celebrating 10 years of Bitcoin Pizza Day, which is so May 22, 2010 was when Laszlo bought a pizza for 10,000 Bitcoin. So I believe that's now worth $100 million. So a very expensive pizza. And then just on the topic of whilst we were talking about scams and how to keep you guys protected and safe, for those who have been following us for the last couple of weeks, as you know, we've been doing 2 courses per week. So we do a Bitcoin for beginners, and then we do this weekly crypto update. And so for our Bitcoin for beginners, we're actually running together with Bitcoin Malaysia a course called FastPass, and so that's a 3-day workshop that basically teaches you how to get your wallet set up for Bitcoin, Ethereum, how to protect your keys, how to safely invest, how to look at projects, how to avoid scams, and basically get you to that more intermediate phase. Now the early bird tickets for this course actually are on sale right now, and they are expiring at the end of the day. So I urge any of you that are interested in upping your level of proficiency in cryptocurrencies to look into this. The next thing that's kind of interesting, and the final thing that I'm just going to talk about is, so actually this week we had an update from our governor of the BSP, from the Banco Central, and he mentioned by 2023 he wants to actually increase all digital or all payments or retail payments to be at least 50% digital, and that's very, very promising for the Philippines. And obviously you can imagine that cryptocurrencies and e-wallets are going to play a part of this. Right, so I'm going to hand it over to you, Luke. Are you ready?
Yep. I'm just doing my last little screenshot here. and just pumping that in. So, yep, coming in now.
Okay. No worries, but maybe just in the meantime, okay. So I do have one more window which is open, and it can be interesting for people, kind of in the local setting of the Philippines. Definitely we're seeing continued interest, right, in this cryptocurrency space, and people trying to build adoption, and that's kind of why we're here right now, is to kind of educate people and to protect people as you navigate this new industry, right? So in the Philippines, you can see actually in terms of jobs, there are actually a few new jobs actually coming into the market. So you can see like crypto.com is hiring in the Philippines, Binance is hiring. These exchanges are basically starting to come up. See, ICO Check is looking for researchers on the ground. So yeah, it's an interesting time, and definitely promising for people who have been in the industry and are interested in getting involved in the industry. How are we looking, Luke?
Yeah, good. Just 2 more things and I'm done. All right, excellent. All right, coming in now. I'll just get my slides up.
Sounds great.
Where are we? I think I just need to make sure that this is in presentation mode. And I've got to come over here and share my screen. Okay.
Sure. Actually, whilst you're doing that, let me just, for the benefit of the newcomers here, for the people that have not been here before, let's just give a quick introduction actually to ourselves. So my name is Peter Ng. I'm actually the founder of BlockchainSpace. It's been an education hub for blockchain and cryptocurrency in the Philippines since 2018. And we basically have a network across the Philippines, Thailand, Malaysia, and Indonesia. Our aim is basically to host more of these kind of events, meetups, also work together with developers to run hackathons, and basically try and kind of push this space and promote more adoption. We have the pleasure of Luke giving us a presentation every week. So we seriously thank Luke for putting in the time and effort for preparing slides for us. Luke is the founder and CEO of Fortifex. And Fortifex is a crypto dashboard which aggregates information into one place to manage your portfolio and trades. He's been in crypto since late 2016, working on portfolio management and research into data integration. Right? He's been speaking around conferences around the world since 2017, and typically talks about crypto and risk management. And what keeps him busy right now is actually working with government entities around Southeast Asia, helping them to better manage their crypto ecosystem and running training sessions for beginners, basically not to get scammed again. So without further ado, let me introduce you to Luke, who will be giving us a presentation for about the next 20 to 30 minutes. Thanks, Luke.
All right. No worries, guys. So today, I mean, this has been updated from the few times I've done this. So anyone in Malaysia viewing will probably have seen bits of this. I have updated some of the data, but look, we'll just go through it as best we can. I'm actually going to compress a little bit of it and leave a few bits and pieces out. But at the moment, yeah, let's get to it. So this is an update for the crypto and corona, like sort of what has been happening in regards to both the existing financial markets and the cryptocurrency markets when it comes to the coronavirus, and understanding how they're linked and sort of what we've sort of seen coming out of it. So at the moment, just a little bit about myself. So I've been trading for about 13 years now. Currently involved in using big data to help basically governments and other major ecosystem managers to sort of manage the cryptocurrency environment. And I'd probably say that I do actually genuinely care about people being safe and pragmatic, especially in the financial market space, which is sort of what I've done in the crypto space as well. So, I mean, it's something that people say a lot, but I mean, whenever I do any kind of educational thing or anything like that, 99% of the time we focus on trying to keep people safe rather than giving these, really highly motivational, this is how you're going to be a millionaire next year kind of talks. I think the real value that we sort of add to the ecosystem and This is both Bitcoin Malaysia, myself, and then obviously what Peter's doing in the Philippines. One of the big values we had is that our value is not going to be that we're going to make you a millionaire. It's that we're not going to put you in debt. Like, we're going to be able to we're trying to basically get people educated to such a degree that you're not going to fall for some stupid scam and lose a bunch of your money, or even sign up to some ridiculous motivational pyramid scheme kind of thing and lose all your money. I got a message last night from somebody who was in Malaysia, actually, who was asking me if it was like some kind of credit card crypto deal where you get a gold credit card if you sign up now and blah, blah, blah. And it's worth $10,000, but you get it for free if you sign up and bring 10 of your mates and blah, blah, blah. And it's all a complete joke. If you, you have a look at the way the website's built, you have a look at what the underlying business model is, and there's just no value to the end user. And they say that they can do zero fee Bitcoin transactions, which, as we all know, are physically impossible if they're on chain. That's sort of a very, very important part of the network. But and what we try to do is, and I do that kind of stuff for free. Like if someone comes up to me and anyone wants to contact me and say, "Hey, is this a scam?" I'll 100% give you my advice for free, because I think it's something that we're really, really passionate about. Anyway, so let's just get into it. 2020 hasn't been the most ideal of years kicking off. We're 5 months in, and from an environmental standpoint, you could say COVID's been a good thing, but for the human race, it hasn't been ideal. So we started off the year very, very early on with the United States assassination of a senior Iranian diplomat. Then in response, well, who knows what happened, but Iran downed a UN passenger plane. People speculated that they thought it was an American plane and was retaliation for what they had just done a few days earlier. But, we never know with these things. Then we had a bit of turmoil in the United States, especially in regards to their current president, Donald Trump. His impeachment kicked off. We had a locust swarm ravaging East Africa. We then had the Taal volcano eruption in the Philippines, which saw a couple of hundred deaths, but more importantly, the damage that was done to the surrounding area was fairly significant. Then we had an earthquake in Turkey, a Kashmiri avalanche. Those of you would have seen what happened here in Australia with the bushfires, like over 1 billion wildlife dead, thousands of homes destroyed, quite a few deaths as well. And it went for a way ridiculously long period of time. When I came home over Christmas, I think I was home for 3 weeks after traveling, and I don't think it rained once. It was absolutely insane. At the same time that was happening, Indonesia was flooding. And they had cars being swept down the streets because the water was that high in the middle of a capital city. It was absolutely crazy. And then to top it all off, now we're dealing with COVID-19 amongst a lot of other things, and it will probably cause a whole lot of other dramas as well. At the moment, Australia is starting to get involved in a trade war with China, which is always a great decision by our government. But yeah, we won't get into that right now. So currently, when it comes to crypto, there's diversive news. When there was an initial fall of Bitcoin, which fell at the same time as the Dow Jones did, people were talking about how crypto had failed as a safe asset because it wasn't correlated with gold, blah, blah, blah. Sort of saying it had failed. However, we'll have a look at those figures and see what happens since and see if there's any truth to that. And there was other people talking about how Bitcoin was great because it was uncorrelated. So you had people on both sides pretty much making outlandish statements about either the success or failure of Bitcoin as if the rise of coronavirus was a litmus test that we're all waiting for to see whether this thing would rise or fall. And those of you who would have been involved last week would probably know that there's a lot more at stake than COVID when it comes to the success or failure of Bitcoin. There's a lot more that goes into it than that. For those of you who saw the talk that we did on what was it? Adoption. However, for those of you who missed that talk in Malaysia, we had to postpone it due to some technical issues. But I believe that we will be doing another session next week. Jason and I are going to work that out when we'll do that. But stay in touch for that. We'll have a look at the Bitcoin Malaysia site to have a look at that. Anyway, So we did see a lot of back and forth, and sort of it was, you'd read one article and then most of the information would be contradicted in the next one, which would then be contradicted in the third, and it was very, very emotive and just based on opinion, not fact. And then obviously there was a lot of uncertainty at the time, especially in April, leading up to what would have happened in the Bitcoin mining, in the halving, the Bitcoin halving and the mining reward. What would happen in May once that took place? And you know, we'll have a look at that as well, briefly, and not as much detail as we did the other day, but we'll have a look. But here's essentially the timeline of what we've seen in COVID. You know, we sort of first kicked off in December. And then then it started to get more serious. We don't, obviously, I'm summarizing this a lot, but there wasn't a lot of information coming out of China at the time. And so then the first case, or the Chinese informed WHO officials of a new virus at the end of December. Then we see the spread happen internationally around the 14th of January. Around the 23rd, it then was widely internationally spread. And then China started to bring in travel restrictions. I mean, there's a lot of conspiracy theory stuff going on with this at the moment, saying that they didn't stop international travel, but they stopped internal travel, you know, especially from Wuhan, but then international flights were still allowed in Wuhan. It was very, very controversial. But I mean, I honestly haven't been able to find information that you could say is 100% true or false when it comes to that stuff. So, I mean, anything relating to these conspiracy theories has to be taken with a grain of salt, because I'd probably say the journalistic standards of the day are a lot lower than they would have been 20 years ago. In February, Chinese market was the first one to have a major correction on the downside of about negative 12%. You know, we then had, you know, Trump talking about how amazing Xi Jinping, you know, had handled the virus. And then obviously we now know that he's 180'd on that and is saying that, you know, we need inquiries at how badly they handled it and whether it's a big conspiracy. Obviously there were cases in the United States in February. You know, that the United States announced in February 13 that this will become a communal disease, which, as we all know, is now true. Apple announced their first profit warning on the 18th, saying that due to supply issues from China, increased shipping, and I can say that's an actual thing. Like, you know, trying to get product out of China right now, like the shipping fees are just absolutely ridiculous, especially to Australia. And I mean, this is the first time when we see Apple announcing, like, you know, a company being affected by COVID, like where an actual business is starting to be affected. We're actually starting to see the commercial world being affected. On the 21st, the US then brings in travel restrictions. 25th was when San Francisco declares a state of emergency. And then on the 28th of February, we saw the first deaths in the US and Australia. Now, why, if you're asking me why I'm talking so much about America in this case, I mean, they are still the world's largest economy. They do, I mean, like most markets are traded against US dollars. And the most amount of Bitcoin transacted, I mean, from a market perspective, is done in America still. So if we're going to be comparing, you know, traditional markets and Bitcoin, I mean, this is the reason why I've done this, is because, I mean, by the way, as you know, I'm not American. I have no horse in that race, but I think that if we're going to analyze these markets and have a true comparison, we've got to look at the biggest players in both, which is America. On the 4th of March, the Fed cut rates by half a percent, which is fairly massive, and they passed their initial $8.3 billion Corona bill. Now, I talk about this a bit later down here, but it should be noted that the United States is now looking at funding Corona support in the order of $3 trillion. On the 11th of March, and this is fairly significant, or the 10th and to the 10th, 11th, fairly significant. This is where we had global lockdowns. This is the time period that, you know, Australia shut their borders. I know Malaysia shut their borders. I think on the 18th was when the Philippines shut their borders. So you had all these major shutdowns happening and border closures. And that was obviously fairly significant. On the 11th was when the WHO declared a global pandemic. The 13th was when the US declared a state of emergency nationwide, and that was their first aid package coming out on the 25th. And then in the 31st of March, deaths in the US surpassed China. In April, cases, you know, early April, cases globally topped 1 million. Boris Johnson was put into the ICU on the 6th of April. Trump announced a plan to stop funding the WHO on the 14th. Then the IMF on the same day warns that the global downturn has been the worst since the Great Depression, or will be the worst since the Great Depression. On the 26th, global death toll 200,000, and on the 20th of April, the US alone hits 1 million cases. So far in May, the WHO on the 1st has extended the public health emergency. They've obviously announced that the WHO has, may never go away. And then on May 17th, Japan and Germany, two of the largest economies in the world, have actually declared that they're in recession. They're in an actual economic recession. These two will be left for June and July as we continue this series and see what happens. So this is an example here of what happened with that Chinese crash when they had that 12% down day. This is, and then this is a bit old. This is from April, but you can actually see the kind of severity that happened in that market. Now, the reason why I bring this up is because some of you may have already seen this slide, but that's actually where that happened, and this is the impact of the Dow Jones. That's the impact of the Dow Jones of that market crashing. So one of their biggest trading partners and the second biggest economy in the world goes through 12%. The US does not even blink at it. It's fairly interesting to see. But here we can see for the start of Corona, no one really cared. The top sort of came in of this market around the time that the US has sort of said, okay, this is going to become communal, and then companies start getting affected. I should really next time bring up Amazon's share price because that's very interesting in this time. And we can see that as travel restrictions started, as we called a stage of emergency, you can see the fear building up in this market with this downward move. And then we've seen the first deaths in Australia. I don't know why this is the reason for this slight run up is because we've started to inject more government money into the economy, which worked in the GFC. Then we had the Italian lockdown. And then on this date here, this one here, this is the 10th, or the 11th rather, where the WHO declared we're going to see a global pandemic, this first little red bar here. This is where all the global lockdowns are happening. The market just obviously tanks down into that. Then as we see more money being pumped into the economy, 2 trillion goes in, and then we've seen death surpass China. Now, I continue this in a second. We can see what's happened in the past month and a half after this chart, but trying to cram all this into one page looked a bit messy, so I just decided to create a new one. This is the same for Bitcoin. This is the first half of Corona with Bitcoin. Yet again, pretty much the same. The only difference is that Bitcoin has actually recovered. If you have a look at high to low, the United States Dow Jones didn't really cover that much, whereas Bitcoin has actually recovered more significantly. When we have a look at the next chart, the next few charts, you'll see how much more it's recovered. I don't know why that's doing that, but anyway, okay. Then we have a look at, this is Bitcoin again. And this is sort of what's happened since then. And as you can see, Bitcoin has actually gone up. That's where we sort of that's that big down move there that we looked at there. There it is there. We can actually see that Bitcoin has not only crossed that, but we're actually up almost to where our all-time highs were previously, which would have been this high here is the one we're looking at. So if we're topping out just over 10,000, we can see that we've actually we are actually pretty close to where we were at the highs of the market pre-corona, and so that's fairly significant. In the same time period, this is actually the Dow Jones. I will actually get up a Dow Jones chart in a second. You can see the difference, but since this major downward move over here, which is sort of where in April, where we've seen this sort of big run down in the market, Bitcoin's still down 7% from its high. However, the Dow Jones is still down 15%. So we've sort of outperformed the Dow Jones by roughly about 7-8%, which is still pretty good considering. If we compare that to gold, this is from the Dow Jones perspective. We're seeing that from, I think this is from mid-February, we can see that Bitcoin is actually outperformed by about 11%. So these are the highs up here that we had previously. This is from the high of the market. You can see that Bitcoin was up quite significantly at that point of time. And we're almost reaching that period, whereas the Dow Jones, if that's the high there, we're sort of not really even remotely recovered at all. It's pretty severe. If we then look at gold, This is actually gold, and then we have the Dow Jones in red down here, and then we have Bitcoin here in gold. This is actually from the 1st of January, so this is a year-to-date chart. Makes it a bit more interesting. I mean, the old one, if those of you remembered, Bitcoin was actually breaking even for the year at the time. Whereas, and so I think Bitcoin, I think the Dow Jones has always been at this sort of negative 18 to 15% level, which is where it's been throughout this whole time period. You'll probably notice that for the year, for the financial year to date, gold has performed 13.57%. So gold's done pretty well for the year, 30%. Bitcoin has done 32% for the year. So, I mean, from a straight out investing standpoint, you could pretty much say that, I mean, that's an outperformance if I ever saw one. So, you know, where we were sitting before, I mean, I did say that I thought that in previous sessions like this, I said that I looked at Bitcoin as a hybrid, is in a much more volatile, much more immature version of what gold is, just due to the age of it, the lack of overwhelming public understanding, the lack of availability that it has to a lot of people. I mean, not everyone can access Bitcoin in the same way. However, it is more accessible to people than solid gold. I'll give it that. But I'll probably say there's not that global consensus about what Bitcoin is, which is sort of what part of what's holding it back. However, I mean, that's a pretty good outperformance. 32% up for the year is pretty good. And that's even after it's had this big run up and then this big run down and then this big run up again. So, I mean, would I be saying buy Bitcoin right now? Not really. But I'd also not be saying if you're holding some to sell it. I mean, it's really a wait and see period. I mean, technically the trend is still up on Bitcoin. However, I think that I am not saying this is advice at all, and I'm not suggesting that people should act on it. But my gut feel would be that, gold would continue to trend up, especially as this recession pans out. And I think Bitcoin will just be on either side of it as it goes up. It'll be outperforming and underperforming as it goes up. So it's a bit more volatile, but I can't see it obscenely outperforming gold, in the order of what it did in, say, 2017. But I can't see it overly underperforming gold either. So I think that over the year, you'll see this kind of pattern going up, going down, going up, going down around gold as it goes up. And I don't see the United States stock markets doing too well over the next little while. Now, the reason why, I mean, we're all expecting recessions. You've got millions of unemployed people around the world. I mean, in America, there's something like 30 million or 40 million newly unemployed people. I mean, they're expecting the unemployment rate is going to hit 15% or something. And those are people who aren't going to be buying cars. They're not going to be buying coffees at Starbucks. They're not going to be buying, they're not going to be going on holidays. They're not going to be doing all these consumerist things that Americans love to do. I mean, I can tell you things they are going to do, though. They're still going to buy fast food. They're still going to shop at Walmarts. And they're still going to need all that basic stuff. But anything that's not 100% necessary in life anymore, I reckon is going to go out the window. I mean, there's still going to be people buying the latest iPhone, but I think there's a lot of other people who think that, the 2019 model is going to be just as good till 2021. I don't need the 2020 model this year, stuff like that. But I expect any of those unnecessary premium items that we would usually see going out the door, Apple Watches, all that kind of stuff, I just don't see it performing that well in this next financial period. So what now? Yet again, I mean, even though Bitcoin has outperformed gold, I still would not view it as a safe haven. But it has outperformed most global indices. Actually, it's outperformed both gold and all global indices. And has recovered better since the corona outbreak, thanks to global quantitative easing. So there's another part to this that, obviously, due to the deflationary nature of Bitcoin, you're going to see less and less of it printed over time, which means that the only way forward is that either Bitcoin ceases to be used or its price goes up. It's an absolute risk situation. Either it has to go up or it will cease to be used. It's that binary. So if you believe that Bitcoin has some kind of future, but you don't know what it is, then technically it has to go up, just due to the nature of growth and scarcity. Or the alternative is you think, well, I can't see a use for this, so it's going to be worth nothing, in which case it goes to zero. At the moment, I think that's sort of my sort of round view on Bitcoin. I'm not suggesting people do take action on that comment, and I really would suggest that you do whatever you can to research whatever you want to sort of get into a position where you can make an educated decision. But honestly, I mean, yeah, I'll probably still say that Bitcoin is not as safe as gold. It's easier to acquire, hold, and sell. But we're still in this really volatile period where there's a lot to be made, but also a lot to be lost. So you need to be quite careful. I'd also note that searches for Bitcoin are up 183% in the last 30 days in China. And that searches for Bitcoin actually went up significantly after the 13th of March, which is 2 days after the WHO declared a global pandemic. Now, yet again, that was also because countries at the same time were printing more money, doing these issuance packages, unemployment was rising. All these, as you lock a country down, jobs are lost, like cafes, bars, pubs, clubs, blah, blah, blah. Everything goes out the window. And that's less people earning, less businesses earning, less people spending, which is always bad for an economy. So then governments have had to pick up the windfall. Now, the way that they do that traditionally is by taking on debt, printing treasury notes, which increases monetary supply, which decreases the overall value because the interest rate that people are going to be earning on those treasury notes is like nothing. This is an example of things to be careful of while looking at this in the space at the moment, is that we have sort of 7 articles here, and every single one is contradicting the other. Coronavirus is forcing fans to realize it's not a safe haven. While coronavirus rages, Bitcoin has made leaps towards the mainstream. Bitcoin price did not crash 60% due to coronavirus. Coronavirus will send Bitcoin price to $100,000 in 2020. Bitcoin just failed the coronavirus test. Bitcoin ends Q1 down 10%, outperforming equities. And so it's all this, you've got all these people with all these opinions. I'd probably say that, coming from their own personal perspective, they have an idea to go on it. But I think that it's still too early in the game to make, these big comments like Bitcoin just failed the corona test. Bitcoin will send price to $100,000, all this kind of stuff. I mean, what it is, and there's people that do it in the financial service markets as well. So what you do is you just put out some statement, and if you have it on a blog or whatever, I mean, people say stuff is on the internet forever, but there's ways of managing that. You can just delete it, when your point is being true, and they'll come back and say, oh, look, I was wrong. That's fine. But what happens is the marketing clout you can build for yourself. If you're the guy who said, in 2020, when Corona started in 2004, on the 14th of April or the 14th of March, I said Bitcoin is at 100 grand because of this in Corona, in 2020. If it happens, you get to ride that for 3 years and talk about how much of a friggin' genius you were, and you called it because you're the man. If you get it wrong, oh, well, you just go back to the, you just retract it, say I was wrong, oh, well, move on, make another outrageous claim. The same thing as well with the happens with the on the other side about saying how it's going to go down and it failed. You can be the guy that calls the failure to Bitcoin. So it is what essentially a lot of these guys are doing is setting themselves up for these predictions, and then we'll just see what happens. And then if they get them right, they're geniuses. If they get them wrong, they retract it, move on. It's a no risk, high win situation. So you've always got to be aware of people doing that. I mean, I know that in 2007 during the GFC, there were all these guys who came out and was like, oh, I predicted this, I'm the man, blah, blah, blah. But these guys were perma bears. And it means that they're permanently bearish on the markets. They call for a recession, or they call that the boom is over this year every year for the past 5 years, but they don't talk about that. They called for an end of this big bull market we had from 2005 till 2009. Every year, this is the top. It's all going to shit. This is the top. 2005, 2006, 2007. And then eventually in 2007, they got it right. And then they write all these books about how they were right, and they sell them to a million different people and blah, blah, blah. And that's how they make their careers. So be really careful of these outrageous statements. Like guys saying Bitcoin's going to be worth $100 million and blah, 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 blah. It's really what it is. It's just getting eyes on you, and then you then try, and then people are trying to push their messages. Now, this is stuff that's a bit old now, so we're not going to really worry about that at the moment. Any of this at the moment. Didn't realize that was in there. So yes, that's essentially what we're doing, what's happening at the moment. I still believe that we're going to see a bit more upward movement in the current market. But I think that the three markets you really want to watch to sort of get some perspective is going to be the DJ, which I think the Dow Jones, which I think will almost sort of be the antithesis of Bitcoin. Then you'll see gold, which should be in the middle, and then I think Bitcoin's probably going to outperform, especially because we've just had the halving recently over the next little while. Now, I think that personally speaking, I'm not advising anyone to buy, sell, or anything. I mean, personally, I think that Bitcoin's had a fairly big run at the moment, and I think that it probably needs a bit of time to cool off before I would be doing anything crazy. But anyway, that's me done. Any questions?
Thanks, Luke. That's awesome. As you know, I always have questions. So actually, you mentioned basically those three indicators, those three markets basically to watch: Dow Jones, S&P. Sorry, what was the third one again?
Gold.
Yeah, gold. So why? Can you just remind us exactly why again? Like, is it because for S&P and Dow Jones, I couldn't get it. It's basically is it because U.S. Investors are the ones that are driving Bitcoin price?
No, it's not. It's not them solely. We just look at volume, where the highest volume is. So you don't look at the biggest issue with Bitcoin is it's traded over so many markets. So every country has their own fiat to Bitcoin exchange. They'll have their own market. They'll have their own chart on how the previous price movement's gone. Some will have low volume, some will have high volume. I mean, you've got exchanges in the Philippines that are dealing with pesos. You've got exchanges in Australia dealing with AUD. You've got exchanges in Malaysia dealing with ringgit. In Malaysia dealing with ringgit, and Indonesia dealing with Indonesian rupiah. So, however, none of their volume, as in the actual amount traded per day, shines a light on some of the biggest US exchanges. Now, I mean, I could look at something like the Binance chart, which is yet again a USD chart. However, I still think that if you have a look at the biggest American exchange, which is a cash settled exchange, is in its physical dollars going in, physical dollars going out. Whereas, as we know with Binance, it's not. That is the best indication of what a market is actually doing. It gives us the most reliable data, and it's probably one of the better ways to do analysis. That's why I do it. That's why I look at the states, not because they're necessarily the most buyers and sellers every day, but consistently you'll find that there are more Americans per capita holding Bitcoin than other countries. And they generally are, as much as people talk about China taking over and blah, 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 America is still the world's largest economy. We can't get away from it. And everybody will follow what the States does. They're the biggest consumers of everything. And it's more significant when they stop consuming than anyone else.
Wow. Yeah, very, very, very interesting. Also, something that is going to be like the talk of the town for the last couple of weeks is really about this, how we're so correlated basically between like Bitcoin price and S&P and Dow Jones, but then people are looking basically for decoupling indicators. Is that something you look for as well? And what do you think that do you think that will actually even happen?
So just to ask that a bit more concisely.
So do you believe that the price of the Bitcoin will decouple from the US stock?
It already has. It already has. I think it decoupled the second that low came in. If I get that chart up, I mean, I don't see many. Oh, hold on, I'll get the chart back up. I mean, application window. Here you go. I mean, that's after that low came in. I mean, it was sort of the low for Bitcoin came in a few days before the low for the Dow Jones came in. I mean, yeah, they're moving in the same direction here, but I mean, like the top come in here, the Dow Jones come in a few days later. I mean, I would have a look at these movements and say that I don't really see, any major correlation between the two. I mean, you could say that, yeah, these look like more extreme movements. However, the short period of time that this is over is a bit hard to sort of have a look at. But I don't know. I'd probably say that at the moment, I don't see, even if you have a look at these compared, I don't see where the major correlation. I'd probably say that the correlation is closer to gold than it is to the Dow Jones. I mean, the Dow Jones has just slumped and hasn't recovered, and then Bitcoin sort of shot off and outperformed 37%. So we're talking about it's now out of the money compared to the start of the year, where they both started at the start of the year, and they both were very similar at the start of the year. I mean, like that percentage differential is like 40, 50%. I mean, you can't tell me that's correlated.
Interesting.
Mm.
Then just a final one from me. On that slide that you've got there. So you mentioned that Bitcoin searches are up 183% in China. So what should we make of that? What do you think? I mean, do you think that's basically more retail interest from traders?
That would be retail interests. I mean, if it searches and it's a significant number, it's retail, because obviously, business wouldn't be that significant. That would be people concerned about the inflationary side of their currency, which we talk about in the adoption thing, as you remember. Like, it's basically that if I have $1 now, I'm going to be able to purchase less with that dollar in 12 months' time. Which is sort of how inflation works. Which is something that if you have a look at on a chart, every country's got to deal with it, in its own different ways over the past 50 years. Whereas, and obviously the thing that balances that is job growth, and the amount of money people get paid is meant to increase commensurate with inflation. Now that hasn't been the case. Well, I know it hasn't been the case in a lot of parts of the world. I know it hasn't been the case in Australia, where wages growth is stagnant for the past 6 years, but inflation's been going up at 3 or 4%. So if you compound that, it ends up being like over 5 years, it ends up being like 10, 15%. It means that the amount of money you earn every month hasn't changed, but your costs have gone up by 15%. Is in the cost of cars, the cost of groceries, cost of petrol, all these other things combined in a basket have gone up. But the amount of money you have the ability to earn has not. And that's been a problem globally for the past, since the GFC pretty much, as we all sort of struggle to recover from that. And what people are now seeing, and I'd probably say this is the case, is that people are much more aware. And obviously this is due to marketing from Bitcoin and, a lot of the speculative stuff that comes out. People are looking at Bitcoin as still being that hedge, about saying, well, I've got $100,000 in the bank, and I don't want to only be able to purchase $90,000 worth of stuff next year. I want to be able to purchase $100,000 worth of stuff. That's the whole point of saving money. You don't put money in the bank and save it so it can be worth less, 10% less in a year's time. So people are diversifying into different assets to hedge against that cost. Because the biggest risk to people's wealth, in my mind, over the next, let's not even talk about investing and making money. I mean, just trying to reduce the risk that you get sort of smashed by this inflationary nature of cash, is to diversify a small portion of your cash into other assets that will not deteriorate over time, because cash traditionally deteriorates. I mean, it's been an age-old thing in financial planning where, if you put your money in the bank and you earn 3% interest, you're going to have to pay tax on that interest. So let's say it's a third. So you only really earn 2%. And if inflation is greater than 2%, you've actually lost money over the year, which is why in financial planners get you into all these different products, which generally outperform. But the whole idea is just to hedge against inflation. So the $100,000 you have now might be worth $105,000 next year. But the whole idea behind it is that, whatever you can buy with that $100,000 now, you can still buy that with 105 the following year, because obviously you've covered the price increases that come up with inflation. And so what people are using, say Bitcoin, gold, even probably stocks at this stage. I mean, what people are using that for is a hedge against inflation. So like I said, you got 100 grand, like for example, you got 100 grand in cash. All you need to do is diversify a small amount of that into something different, and it can significantly reduce the risk of like what I said. Like you've got 100 grand in the bank, you're going to burn 90 grand worth of stuff the next year. I mean, an interesting chart is if you have a look at Australian housing prices, the prices of house in Australia compared with Australian dollars. In Australian dollars, if you have a look at it, looks like this chart that just goes up exponentially. And you're like, wow, this is crazy. But if you then have a look at that chart in relation to the US dollar, it's actually quite a reasonable line, because obviously they're sort of saying that is the rise and fall of the value of the Australian dollar. Basically, property is a hedge against that. And because the Australian dollar has fallen so much, that's why our property is worth so much in Australian dollar terms. So things like that happen. That sort of, I guess, I don't know. I'm hoping that people made sense of that ramble, but yeah, that's sort of the understanding you get after being in finance for 15 years.
Yeah, no, that's super in depth. Yeah, super appreciate that. Like, awesome. I'm gonna wrap up for today. So again, thank you as always. Thank you for some really great insights, very, very detailed slides. And if anyone has any questions for Luke, not only just drop them in the comments, but also we'll leave our social links below so that you can get in touch with us at any time. And just a final reminder. So again, we are running a 3-day workshop basically for beginners called Fast Pass, and that's basically to help people to get into the space. So if you know people that need help learning how to set up wallets, protect the keys, how to formulate proper portfolios and avoid scams, then let us know. So early bird finishes later tonight. So we'll leave the link below for that. And yeah, so thank you very much, Luke, and we'll see you again for next week.
Yeah, I'll just note that the 3 separate days is something we're doing for the Philippines only, as we do have people in Malaysia watching as well. So anyone who's from the Philippines interested in that the Filipino session essentially is a standard 1 day that we normally do in Malaysia, split up over 3 days for convenience.
Right.
And so if you're interested in discovering more information about that, yes, contact Peter for the Philippines, or be in touch with Jason at Bitcoin Malaysia if you have any questions about how that works in Malaysia.
Perfect. Thank you very much, Luke.
No worries. You too, buddy. Have a good one.